Ladies and gentlemen, welcome back. We got another episode of Chart Talk coming at you. It is November 6th, 10:52 here on the West Coast, 11:12, 1:52 out by Bennett on the East Coast. And Bennett, you're looking sharp, brother. What's going on? Tell me what's going on, huh?
Well, I feel like you should probably tell them because it was really your idea of why I'm wearing.
I'm very, very excited about this idea I have. I have to get my own tux. This year, we are going to have the first annual Trading Experts End of the Year Awards. Such awards given out as Trader of the Year, Most Improved of the Year, Trade of the Year, and things of that notion. So, we're going to start it up this year. We'll have a big Zoom call. We're getting trophies made. It's going to be a good time. We'll have some cocktails, do it on one night. It's going to be great. And we'll get to award some of the hard work we've seen this year. No surprise, the guys who talk the most in the chat end up making the most money. So we want to reward these guys for, just a great year. This has been a very difficult year in the market. And honestly, I think we've handled it very, 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 very well. Very proud of the progress we've all made as traders. If you showed me a chart of this market a few years ago or whatever, I'd be like, oh God, it's gonna be such a terrible year. But we're really navigating it really well to the long side, to the short side. So we're gonna do a little end of year, award show. It's gonna be great. Bennett previewing what his tux will look like. My man is looking good. My man is looking sharp over there. Love that. Yeah,
I think we have to just, I think the easiest way, probably the next 2 weeks, we'll just put the title, the different categories, in the newsletters at the end. And then the person can nominate themselves and we'll put a list and then we'll reach out to the members accordingly and just fact check and see, you said the best trade and we'll figure out who's going to be nominated and then who will win, each of those categories. So we'll guys keep a look on it, keep an eye out for the next couple of newsletters. We'll give you guys some more detail.
Yeah, I love it. I got some good ones in mind. It's been a very, very good year for a lot of us. So, reward those who put in that work. But okay, that's enough of future plans. Let's jump into some market outlook. So, last week, there's a saying. It says, nothing to change sentiment like price. What does that mean? Well, let me share my screen for you. So here we have the S&P up, SPY. Testing the upper bounds, the sloppy trend line. But what happened was, heading into last week, this was the setup of the market. Things looked very bleak. We tickled that 10% correction from highs in 3 months. It was pretty fast, final 5% down. Took a lot of people off guard, hit a lot of people off guard when we, took this little mini flag and broke it downwards with, such velocity. 1, 2, 3, 4, 5, 6. 6 of 8 days being harsh sell-off days. So, we're heading into the market last week. It's we just want to see some constructive action. We want to see the market hold up. We want to see where the strength goes. So we get a few days of consolidation, Monday, Tuesday, kind of holding up. And at this point, most market participants were looking at something like this. You see these two little consolidation days. They're not huge snapbacks, and it's within a downtrend. Why wouldn't we expect that from there? Same thing, kind of setting up. What happens? Takes everyone off guard, and we blast higher on the Fed. We blasted higher because we didn't raise rates for the second month in a row. Market participants are thinking that the rate rising cycle is done. And then Thursday, we had a further blast off on a jobs number because we're seeing the unemployment numbers tick up. Now, why would something that's bad for the economy be good for the market, right? Unemployment ticking up is bad. People losing their jobs is a bad thing. Well, the mandate that Jerome Powell, the Fed Chair Jerome Powell is looking for, he needs to see unemployment tick higher. He needs to see the jobs market loosen up a bit. It's very tight. It's very, very strong. It's too strong. We need to see a little economic contraction so that we can battle this inflation. The only way inflation is going to go down is if the economy comes in a little bit. Very simply, we need to see the economy contract in order to battle inflation. That's the only way that inflation can come down, is if we see this economy contract, the unemployment ticks up, GDP goes down, things like that. Pretty much, the economy making less money. That's what we need. That's the only way that inflation is going to stop and consumption is going to slow down. That domino effect. That's why Jerome Powell went on this crazy rate rising cycle over the past year and change, was, to see the economy contract a bit, to see that growth slow down. So the fact we saw unemployment tick higher, that's like the first step towards having the rates come down. So the market is looking forward. The market's a forward-looking vehicle. It's looking forward to potential rate cuts next year so we can begin spurring economic growth once again. So it doesn't have to make a ton of sense. I think that's the part that people have most difficult time with in the market is like, oh, bad news is good news, and they it's that's what it is sometimes. The market's a forward-looking vehicle. You can complain about it or you can profit from it. It's like, but so that's the kind of economy, that's the kind of market we're in right now, where we got that bad news of unemployment ticking higher. The market looks forward to rate cuts, and then we have this huge blast off. Look at the QQQ had its was up 7% last week, best week since November 22, which is a full year ago. And now we look at this weekly chart. Let me get some of these crazy lines out of here. Look at this NASDAQ weekly chart. It looks amazing right now. So we got our big cup, and don't mind these moving averages. They're from the daily chart, but we got a huge cup and handle developing. This thing looks like it's gonna rocket, to new highs as soon as this pattern can take shape. So what do we have here on a broad scale? Weekly chart looks very good, very, 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 very good. Daily chart is stretched. We cannot buy right now. You can, I don't know, but for me personally, it's the waiting game of this consolidation to get long once again. And the last thing is we finally saw rates lose that parabolic run. One of the things we've been saying in all of these chart talks, this move sucks. The parabolic move in rates sucks, but these patterns don't break by going sideways. They break by a sharp correction lower. We're beginning to see the semblance of that. We had a huge 2-day dip that allowed the market to really run. We're seeing rates tick up higher again today, but we'll see if they can come down, retest these highs here, 4.3, whatever it is. So that's kind of it right now. I mean, stocks look good on a weekly chart, but we need to be patient a little bit while we wait for things to develop. But I'll hand it over to you if you want to go over a few charts. The last thing I want to touch upon is let me touch on real quick. The most important chart is not the QQQ or the SPY. It's the IWM, and I'll tell you why. The entire market this year, and we can see how much the IWM, the small caps, have lagged. You look at the QQQ trading around all-time highs, SPY, S&P, 5-10% off all-time highs. I don't know what it is, but something like that. And IWM has just kind of been a disaster since the November 21 top. Mm-hmm. What we saw last week was a huge bounce back in these names off these lows. So we need to, and what that is the DraftKings, stocks like that, the Palantirs, ripped on earnings, Roku, Roku's up 60% last week or something. Lemonade, the AI insurance company or whatever it is, tech insurance company. These types of names, they've been in the dumps, and ARK, they're all ARK names, ARK, Cathie Wood ARK. So can these names hold their gains? That's the important part of the market right now. If these names can hold their gains, so it's not just the Magnificent Seven of NVIDIA, Tesla, Google, those names just carrying the market. If we can see broad participation, then I'm very confident we could see a sustained rally to new highs. If these names just give up the gains, if the IWM just gives this move back, we're going to be in for that hellish market back and forth once again very soon. So that's the key to the market in my eyes. If there's anything you want to go over, the mic's in your court.
Definitely, you definitely touched on a lot.
Definitely touched on a lot. I usually do.
I got nothing. I got nothing to add. No, I'm kidding.
Right. It's sorry, I left you with scraps.
No, but I think
hey, that tux is looking good though.
Yeah. I think both of our newsletters this weekend, I think we touched on a very similar point where it's the market rallied on, if you if you had the real headline, the market rallies 7% on the Fed doing nothing and a worse job support
next year.
Yeah, it'd be like a parody title, but that is the reality of what the market was doing. You would expect to see that from a fake Twitter account. That's
right.
The joke. Again, sector wise, you hit on the rates, perfectly. We saw rates leaving, potentially leaving that breakout stage and moving over to like a topping stage. You touch on the Qs and the SPY. Again, we had, pretty much like a broad-based rally last week, except for a few sectors. Again, utilities didn't really get much love. Again, we've been mentioning just to kind of avoid them for the time being. Same with the REITs, and same with consumer staples. Those three sectors, again, just really got no love from the market last week. And even energy kind of, didn't really do much, kind of reversed, the entire move, even today from what it did get last week. So I think we've had like yourself, myself, and the members will had some very good calls. Tweaks. So we talked about taking profits energy when it was at the upper end of resistance. It's done nothing but pull back since then. Last week we were talking about buying the IWM off of support. I have like the last little recap here from the big picture. Bounce.
You talking about buying that
up off support. Legend. So I bought some. I had like a buy stop in. This was on Wednesday, and I got kind of not trapped. I got into this, like I bought pretty much the gap up, which I was not the biggest fan of. I took profits in it already.
Buy stop set and you got triggered in.
Yeah, like it. That whatever that was Monday morning. Was it Monday? No, that was
Wednesday.
Yeah. It's just like
No, it was Thursday. It was Thursday. The jobs number.
Yeah. Yeah, I got caught on that, but again, I kind of got bailed out in it. It's just very rarely do you catch like the small an index to gap up and hold it. Typically you get the gap and it kind of fills it. But just so crazy moves out of the market last week. I think we had again, the big message really just been like take the profits, because we have seen these bounces get completely negated, and we see new lows after we get these phenomenal bounces. So it's hard to expect continuation through after this 6-7 day rally higher. So like you said, just we need some consolidation. We need the market to kind of tighten up. Individual name wise, again, I know you were looking at this Apple, myself as well. I think we're looking at pretty much similar area through this like 180.
Do you want to hit the weekly chart?
Mm-hmm.
It's really clear on the weekly chart. It's just like really nice,
Yeah. So I think this Apple looks great. Again, the reoccurring theme is going to be most of these names are going to be very extended, and we just need to see them kind of consolidate and tighten up a bit. So for now, this Apple can hold up versus 173 versus 180. Maybe we get a nice little move and we can get that push back to pretty much 200, like that retest of the current high. Another one is this CRM. It's a name that Heaven's been kind of keeping an eye on lately. I know he's been mentioning it in some of the pre-market calls. We have this kind of 210 area that's been setting up. So we see a little consolidation, kind of same story, similar chart with that Apple, maybe not as defined on the weekly as Apple does, but and probably chart wise kind of middle of the range compared to that Apple. And then lastly, we got this TXT up to this 80. We can see this earning, it's been consolidating up here for 2 earnings, 2 quarters now. So keeping on that 80 in this TXT. Again, it's kind of keeping things very light and very simple, until we see some real consolidation out of the market.
I think that is the move right there. I'll go over a few things I'm looking at. Very similar in the aspect of, you see my thing? So I have a focus list here. Focus list November 23. I keep a huge earnings watch list. So these are all the names that have reported like pretty good earnings and had good action afterwards. Gap up, strong earnings growth mostly, or just like a hot name. But realistically, I can't, you can't keep hardcore track of 250, 300 names. So something I've done in the past few months, it's worked really well, is I've kept a focus list. And that's the ones I'm really, really waiting to set up. Some of the ones definitely focused on, and this is going to be a theme similar to what yours was kind of waiting for that second stage of consolidation. For example, is DraftKings, huge earnings move, breaking that little downtrend. And I think this thing's, going to go on a tear for the next few months if the market can remain intact. I think this Birkenstock has another move in it. Recent IPO. We bought this $39.50 last week. We killed it into the weekend. I was so pumped. We were selling into that $41.50 kind of rip. And then it gave it back later in the day. It later recovered it. And, it looks pretty good now. It looks like it's setting up for that move at highs. But there's nothing like letting that cash register ring on a Friday. It feels so good. Vita Coco, just company with really, really strong earnings growth, sales. It's been a crazy market leader, But really, since June, it's just gone sideways. Yes, a very wide range, but this was earnings and this was the move, and it's just kind of still moving higher. Once this one goes sideways, lets these moving averages catch up. Definitely want to be involved in that one. Here's one for you. Look at this GoDaddy. Okay, we obviously see this rip. Can't do anything with this rip. Look at this chart. It's been going sideways since September 2018. That's over 5 years. Look at this thing on a monthly chart. This is a flag. Huge rip into a 5-year flag. This thing, I think, is going to be extremely powerful once it consolidates this move. I mean, it began to break out of that pattern on earnings with this 14% move, but from a macro standpoint, that one looks insane. And then names like Shopify is in that same category of like DraftKings, where it's kind of been hiding a little bit. It's been going sideways the last few months, wide range, but all in all, it's been going sideways. Gap up on earnings, staring at that one. PLTR, we're seeing these AI names come back. What's this want to do? I want to wait for these moving averages to catch up. And then, names like this DoorDash, I want to see if it can hold its gains. You see how quickly it gave its move back today? That's what I'm scared of in this market, is the IWM just catching everyone off guard, because every single person I've talked to about the market, perma bull or perma bear, has the same exact take, is that we're overbought, we need to consolidate, and the Nasdaq's going to break out soon. Even like the biggest bears are saying that. So that has me a little worried that everyone's thinking the same thing. So I want to see names like this Dash, this Lemonade. I want to see if they can hold their gains, these ones that are making big comebacks. This AI, it's been a hot stock. We see it kind of rip that Thursday, Friday. Look at it quickly give back this move. Snow is another hot name. Friday rip, look at it quickly give back this move. So that's a little bit of cause for concern in those stocks. But other than that,
just watching all these names and how they react, over this next week, and not really doing a ton. The big change I've made this year versus past years is I would try to be involved pretty much every day, no matter what. I'm like, oh, I can find the trade, or there's always money in the market. There's money to be made somewhere. Now I'm just waiting till I really, really like something, and I've seen my win percentage just skyrocket, and my life is so much better. Like, I'm not a fucking crazy person. It's pretty nice. It's pretty nice not being psychotic. So I'm gonna choose that path where I make a lot more money with a lot less stress going forward. Definitely. It definitely leads to a lot less trading, but a lot more money. Anything else you want to touch on? We touched on a lot in these 18 minutes.
And that covered everything. Again, the only other big thing on our end, again, I've been working with a lot of members with Skender. We've been doing a lot of tax reviews for 2022.
Why don't we do this in the beginning? No one makes it. It's just me and you talking. No one makes it this far.
Well, if anyone is still here, we're doing end of year. We're preparing for 2023 for the upcoming tax year. So we're reviewing your current tax return, seeing if there's any deduction that you were missed. If you're in New Jersey, this homeowners credit was a big one for a lot of members. Picked up, $1,000 or $2,000 from like excess money from the COVID relief funds that were kind of left over, so people getting some money back from that. So if you want to do any reviews, just reach out to me. If not, I'll be kind of texting everyone and making my rounds for the next week or two. Just be on the lookout for that. And again, as always, I've been seeing a lot more members picking up some of the book series. I've been shipping out a couple each day. So if any of you guys want any of these books, just let me know. I'll send you the link where you can pick them up for a couple of dollars each. All we do is ask for a review in exchange for that. Pretty fair trade. So that's really it on my end. And again, lastly, we'll definitely send out those categories we're going to have the awards for, and hopefully we'll do it kind of end of year, and we'll have a little fun with that one.
Yeah, so, maybe we do a vote or something too.
A vote?
I don't know. Maybe we do like an anonymous vote.
Yeah. Well, I figure we'll get like the people that are in those categories, and then it's like these are the 10 members or so that fit in the best trade or best P&L or whatever. We'll figure it out. We'll get some cool trophies made.
All right. Well, that's all we got for you guys this week. Like, subscribe, ask us questions, whatever you want. We'll catch you guys next week.
All right.